Hey everyone, welcome back. My name is Zane and today we'll be having a look at the graph. Before we get this video started, allow me to declare this video is not financial advice. This video is strictly for entertainment purposes and for educational purposes. Now let's start with the graph itself. Before we go for a price analysis and a price prediction, I would like to explain to you what the graph is through a simple summarized explanation. Now, the graph is a project whose protocol allows for acquiring of networks like Ethereum and interplanetary file system. The protocol does the acquiring and collecting of the data without any interactions with a third party, in effect, in a secure and trustless manner. Now, a simple explanation of the graph is that the project claims that it makes acquiring fast, reliable, and secure, but also allows anyone to build and publish applications programming interfaces, also known as APIs, which acts as an intermediaries and allows two applications to communicate with each other. Now, it's strictly focused on APIs. Graph's ability to let users create and use their own APIs has attracted the likes of Uniswap, Decentraland, and Synthetics. But what's so unique about the graph? What sets it apart? The project's token GRT is involved as each stage of the graph economy, which comprise indexers, creators, and delegators. Indexers operate the graph nodes and stake GRT and make money. Whenever a query is processed, creators decide what to index and are paid for that activity. Delegators get a part of the income earned by the indexers they delegate without running a node themselves. The graph is also exploring providing support for additional layer 1 blockchains like Bitcoin, Polkadot, and Near, making it chain agnostic. So in basic terms, the graph is there to help people build APIs. Now, in additional news on the Graph Foundations allocate over 1.5 million in grants, ecosystem and dev support in Wave 3. So throughout this year, the Graph Foundation has allocated over 7.5 million to Wave 1 and 2 grantees and ecosystem contributors and provided grants to Stream and Fast and Figments to focus on core development of the protocol. In Wave 3, we're excited to be distributing over 1.5 million to grantees to continue building out the Graph protocol, support dApp buildings on the graph, and grow the community. Now, this is quite important because the power of the graph community keeps getting stronger, and it hasn't been a year since the launch of the network. When we announced the Graph Wave 2 grant, we emphasized that working for a protocol means we're all in this together. And we're seeing that the community contributions from all angles. Whenever there's an indexer, delegator, curator, subgraph, developer, or community builder, all roles have proven to be crucial in building the decentralized web. The utility of the graph would not be possible without the community building together, one puzzle piece at a time. Now that's crucial to understand. It makes a lot of sense as well. Now there's also Wave 3 grants. Great applications come from Portugal, Canada, Japan, Korea, Poland, the US, and more. Each application was assessed based on the project's expected impact, community feedback, relative significance, and urgency in the ecosystem. So that's it in a brief explanation, but we've got other things to go on to as well. Now, in additional news, the graph to integrate with decentralized data storage protocol, Arweave. Now, I've actually made a video on Arweave before, and it's on this channel, so if you'd like to check out that video. The Graph Foundation is excited to announce that the graph will support Arweave, a leading decentralized protocol that allows users to store data permanently and sustainably with a one-time upfront fee. This integration will allow indexes from the open APIs powered by the graph to read and organize Arweave's stored data. In other words, these subgraphs will read data stored on Arweave protocol, allowing for quicker and more efficient accesses. Now that's just some brief information on this. which is really exciting because they've got all of these articles explaining so much fantastic things. And if you'd like to learn more, you just got to check out their blogs on their website. Now, right now as we speak, the graph is currently $1 exactly. Now that's quite interesting because on the 12th of this month, the price per token was 0.65 cents. That's per token. And 1 year ago exactly, the price of that token was 56 cents per token. So this token value has almost doubled in the last year. Granted, there's a lot of volume in the graph. This was just around September and August. Quite an important stage because the volume was absolutely off the charts in this area. Quite earlier on in this year, around February, March time, the price was extremely good for this crypto. Plenty of volume that you've never seen before. But most significantly, at its all-time high price, this crypto was probably around $2.60. Now immediately, I'm looking for patterns in this market. What I've immediately done is drawn up two low points in the market, some of the lowest points in the market in the last 2 to 3 months. Now what's really significant is that I've noticed that there's at least 3 patterns that keeps on occurring. And this is in less than a month. This is since the 12th of October this year. This is around 10, 12 days ago. So the question is, what are these patterns? Now what you're noticing here is 3 patterns, and you can just look at these as a ticking symbol, an upwards trend, a ticking symbol, but it's the same thing that keeps on occurring. Instead of having high volatility, it's actually a steady growth, a steady, unpredictable growth. What always occurs after the price goes up really high is that there is a fall in the market. But exactly where it falls, it's around the 50 to 60% area. It doesn't fall down to 10, 20, 30% necessarily. It falls by a tiny landslide, 50, 60%. But what can I compare that percentage to? I'm comparing the percentage to the new breakout prices. The new breakout prices are always twice as high as the pullback areas. That's why I say comparisonly, it looks like whenever the market goes down, it's around 50 to 60%. And that's comparing to the next bull run of this particular crypto. This has happened in the last couple of weeks. And I noticed these patterns almost immediately. So I'm looking at the price of this crypto from around $1 to $1.25. Realistically, probably $1.10. As possibly before the end of the year, but perhaps early next year. Now we do have Christmas on the horizon, which means that there'll be less money going into the crypto market. The graph and all the cryptos will see a significant drop in the prices and volumes. 24 hours trading period, everything will be impacted slightly in different ways, but nevertheless, that's the inevitability. But the good thing is that these cryptos, they can recover quite easily because it's also at the end of the year that the institutional investors, they invest as early as possible. The hedge funds, all of those investors, they invest as soon as possible and as cheap as possible. Just when the Christmas crash happens, that's when cryptos will be at the cheapest it can. In recent weeks, possibly in recent months, you never really know. But these are always good opportunities for investors, and they take these opportunities. These 3 patterns that I've noticed, will there be a continuation in November and onwards to December? Will there be an additional patterns that keeps on occurring like these? There's a short pullback and there's a huge price rally. Those are the patterns that are occurring, and I'm keeping a very close eye on these exact patterns. So this has been my price analysis. This has been my video on the graph. Thank you for watching. Subscribe, and of course I will see you in my next